Hi, everybody. Hopefully, you guys are doing great.
Permanent life insurance. Many people have questions about it. Are they good for me? What are they for? What is the big deal about it? Should I do a term? Should I do a permanent? Well, let's find out. Let's go over these policies real quick and see what's the best fit for you. Stay tuned to this video. We're going to be talking real quick about permanent life insurance policy. What are they good for? Are they a good fit for you? How would they fit my financial foundation plan within my family? And if it's something I want to have, not only for myself or for my kids, where does it fit in within my family plan? Those are the things we're going to be going very quick over, and I'm going to explain to you what is the policies, how do they work, what is the basic information you need to know. Okay? When it comes to a permanent life insurance policy, there's a lot of types of policies that you have. You have index universal life. You have guaranteed universal life. You got whole life. You got final expenses, which falls into a whole life, a type of whole life policy. There's other ones out there that comes into the business world, corporation world, and all that stuff. Between these policies right here, there's different strategy of policies. So even between them, we can have 100 different type of IGLs to fit a specific type of client. Okay, if you're an investor, you might have this specific IUL. If you're just looking for guarantees for income for life, you might want to have this type of policy. If you're just looking something for security that you might want to have because you don't want to do a term policy, you want to make sure that you have $200,000 no matter what. When you pass away to go to your family, you might want to look at a guaranteed universal life. Stuff like that. So there's different things in place that depending on how you want to set your financial foundation, these tools are great tools for you to utilize and be part of your portfolio. All right. So what's a good thing about a permanent life insurance are the following. One thing you want to look into, have coverage up to 121 years. A great structured policy will give you coverage up to 121. So that's one thing you want to look into. The policy will outlive you. You will not outlive this policy. Okay, that's one thing to make sure on it. Another thing is the cash value. A policy, this type of policy has some type of cash value. Some of them will have more than others, depending on which one you're looking at. Some of them, for example, like the guaranteed universal life, might only allow you to touch that cash value at a certain time of the life of the policy. Like for example, I will go on a video on the guaranteed universal life later on, but these type of policies are great because they cost less than a regular IUL, and they give you the opportunity in the life of the policy for you to get your money back that you put into it. Okay, so we go into it, but keep that in mind. If you want more information on the GUL, send me a text, send me a DM, and I will definitely go ahead and sit down with you and talk about it. Whole life, you guys heard about it. You get paid ins, you get dividends paid out to you. You can do a lot of things with the dividend, buy more money, buy more debt benefit, send it to me, move it here, move it there, whatever. I mean, one thing about whole life policies still exists, but there's mostly like old school type of policies out there. So you want to see how that really will balance. So you are final expenses. You probably already heard about it. That's what it's called burial. Your burial insurance to pay for your funeral and so that stuff. These type of policies, they're within the whole life. They do have a little bit of a cash value incorporated with them, not as much, but they mostly give you a coverage up to $50,000 on an average depending. So how does the cash value on that go? For example, if you have a policy with a cash value, what's going to happen is during time, your policy is going to acquire some cash, which means is you're going to be able to utilize that money any way you want to while the policy is still active. You can either withdraw the money and cancel the policy. Say, hey, insurance carrier, I want to be done with my life insurance policy. I see I have $20,000 cash value. Just send me the $20,000 check. I don't care about having the life insurance policy anymore. No problem. They'll go ahead and send you a check. Or you can say, hey, life insurance company, how you doing? I see you have a $20,000 cash value. Well, I could get a $10,000 loan out of my money, and you send it to me and still keep my policy active. They're like, sure, no problem. We'll send you the $10,000, and then that will be it. You're going to get charged a percentage of that money going out. Depending on the carriers, there's different ways you'll be able to balance that charges out. It might go to your policy, it might not, depending. There's different type of plans out there you want to look at and go into. And one thing about a life insurance policy that you want to look at within the cash value, at what time of the years of the policy, does my cash value supersedes the money that I put into the policy? Many type of structural way on the policy. You can do a payout 20, payout 10, payout 50, or pay the whole policy depending on how old you are. Things like that is going to be, as you sit down with one of our agents, they'll be able to explain to you, see what's the best strategy for you. But let's say 20 years down the road, I'm paying $250,000 a month onto a policy. That policy, that means I put in $60,000 20 years later. So it took me 20 years to put in $60,000 into a life insurance policy. So let's say this policy right now, my cash value for this policy after 20 years, I'm just going to throw a number out there, say it's $80,000, right? On it. I put in 60, I got 80,000, I got more than what I put into it. And guess what? I'm no longer paying it because the way I structure my policy, I do a 20-year payout. So at the age 60, 65, nobody's paying no more bills, right? So you want to make sure that your policy, whatever money you put into, the cash value got to be high. Now, what happens with this $80,000? This $80,000 every year is going to continue to grow depending on the strategy that you have it within the policy, right? But let's say I want to take $40,000 off. I'll go ahead and call the company. Hey, I'm buying me a car. I want to pay. I don't want to go ahead and finance through the bank. I'm going to finance my own vehicle. Okay, go ahead. You take $40,000. They send you a check. You go ahead. You buy your car $40,000, and now you pay yourself back on it. That's it. That's how mostly does it work. Does it have fees? Yes, it has some fees. You guys loan fees on this thing. Do you get credited for those loans back into your own money, or do you pay the carrier? Yes and no, depending on the strategy, depending on the carrier, depending on the product. That thing's gonna vary. Most likely, and depending, as we sit down, we see what you want this policy for, but we make sure it fits your needs. There's different type of credit strategies loan strategies when you're looking at these type of policies and carriers. Okay, so one thing you want to keep in mind when you're looking at permanent life insurance, 121. Your cash value right here has to be more than what you have than your contribution. Okay, so let me write this down so we make sure we understand this. All right, what are we looking for when we're looking into a permanent life insurance policy? What am I thinking? We're looking for 3. What are you looking? So what to look for, right? What to look for on the permanent life insurance policy. You want to make sure coverage up to 121 years. Okay? That's one thing you want to look at. That's a properly structured coverage. Another thing you want to see is your contribution. How many years are you putting money into this policy? Now, this is going to be determined on your death benefit. So if you have a big death benefit, most likely if you're not putting a lot of money in up front, most likely you're going to be putting a medium amount for a longer time of period. We sit down and look at that time. But you want to have a contribution timeline for, me personally, anywhere between 10 to 25 years. That's just me. I'm not a financial advisor. I'm not letting you know what to do with your stuff, but that's just me. I would like to see those type of numbers to make sure by you hit your retirement age, you don't want to be paying a life insurance policy when you're retired. Your pay's about to get cut. But if you don't have a good savings plan or retirement plan set in place, when it comes to your retirement age and due to inflation, you do not want any type of dollars leaving the house for anything out there. So we want to make sure that these coverage are in place by the retirement age that you have, okay? On it. And you want to make sure that your cash value, right, is above your contribution. Now, what I mean by that, This is very critical for me to explain. Why is it that your cash value has to be more than your contribution? You're going to be hearing this thing, oh, IULs, life insurance is a scam, whatever. Do your diligence. Whatever fits for you, fits for you. These things been out here for years. I mean, ask Walt Disney what he did with life insurance. But anyway, this thing right here, you want to make sure you understand when it comes to the cash value, the contribution. All right? Your cash value has to be higher than what you put into this policy. Why do I say that? Because if you ever decide to cancel this policy, you're going to get every single penny you put back into this policy back. So how is you losing money on that? On a term policy, remember, on a term, only covers you for a period of time, 35 years. That's it. That is your coverage time. Which means if you pass away during this time frame, the carriers will go ahead and pay out. If you don't know, so what happened to every monthly payments you were putting into that policy? The carrier keeps it. The company keeps it. So I pay money for a policy, then I outlive the policy, I don't get my money back. Just think about that. Does term policy bad? No, they're not bad. I have term policies. I use them for specific ways. In my financial foundation, they're mostly for living benefits coverage. Okay, between here to the time I retire to my retirement age. So that's how I utilize term policy. But I do have permanent policy in place because at a younger age that I obtained them, they're better off for me. And this right here is how I make my money back. So later on, the age of 65, if I went ahead and I put in, like I was showing you guys earlier, $60,000 into this policy, at the age of 65, I went ahead and put $60,000 into the policy, and my cash value is around $80,000. Do I need to explain that? I put in 60, I got 80. I don't care what many fees. You're gonna be talking about fees. Doesn't matter to me. This right here is budgeted for me, for my family financial foundation. I have money to invest somewhere else. I put money to my 401ks, IRAs, EFTs, whatever is out there that you want to go ahead and invest into. You want to go play in the stock market, go play in the stock market. You want to go buy your crypto, go buy your crypto on it. But before you do anything, have a foundation in place. Okay? How's you grow it? Whether it's on the term policy, okay, just to get you started, or whether it's on the permanent side of the house. Have something in place. One thing about permanent life insurance policy. Oh, one thing additional I didn't say about this. It has to have living benefits. So let me get on the blue. Living benefits. It has to have living benefits. Chronic, critical, terminal illness. Any of those things happens to you, you can actually activate this policy, get some money if you need it to be covered for you. Okay? I use those on my term life insurance policy, but you always want to have them also on your permanent life insurance policy because you just want to have everything covered. So, hopefully this video give you some questions to be able to contact me or any of my agents. We'll go over it, the importance about permanent life insurance, what to look for. You want to have a coverage up to 121. You want to see your contribution time. You want to look anywhere between 20 to 25 years, depending on your age. You might be due longer if you're a young kid. You can get a policy on the child. You can think that thing grow on it. The thing is, by retirement age, you want to make sure you don't want to be paying any money into your policies. Point blank. You want to have coverage and no money going into. That's it. That's mostly things you want to look at. Make sure your cash value is higher than your contribution. At what time of the policy? Is it year 5, 10, 15? By what year of your policy does your cash value already is balancing out where your contribution starts going up? That's what you want to see. Okay, you're gonna get a good structure like that if you have if the only way you're gonna get a good structure of balance is if the cash value is if the coverage is set up to close to 121. Okay, that's gonna be at 121 exactly. It has to be close to it. Okay, so that's what you want to look into. And of course, when we say about it, living benefits, you want to make sure you have your living benefits set in place. Okay, hopefully this video was great for you guys. Gives you guys some information on how a permanent life insurance really works. What are the questions you want to look into it? Basic information, send me a DM, give us a call. We'll sit down with you, explain this whole thing for you, find out which of these policies, permanent wise, is best fit for you within your financial foundation. Looking forward to speaking with you soon. Success for the best.
Hey, thanks for being able to come into my page. Looking forward to working with you soon. I see that you're very interested about life insurance. Don't hesitate. Send me a text, send me an inbox. Let's get together and get a good financial foundation plan work for you. Looking forward to helping you guys. Success for the best. Let's go.